Hello and welcome to FWTV episode 20. Today is Friday, June 18th, 2021. I'm your host, Janie Hansen, along with Q Lair for your weekly market update. An absolute explosion yesterday in the bean market. Q, I know you promised to talk about wheat first for the next few weeks, but after what happened in beans yesterday, we got to start there. We'll also cover soybean oil, ethanol, wheat, and inflation. All right, Q, what was the damage?
Well, what happened was there was some inkling from the Biden administration that they were going to be soft on the RINs, which
renewable
the tools for renewable energy. What that meant was that they were going to be able to give refiners, a way to get away from having to blend ethanol.
Oh, they're giving an out to the refiners.
Exactly, and the same with bean oil. So what happened was the entire market just collapsed. We had such a demand expectation from this, and it was driving harder because of the weather and everything else in China, of course, buying. What happened was bean oil just turned around on a dime and went down the limit by 2 days. And what happened was that the crushers were getting out of line. So Wednesday night, the CME group said, okay, we're changing the limits for beans from 60 cents to $1.50 tomorrow.
Ooh.
Yeah.
That's a big difference.
That's a big difference.
And I take it they used it?
Oil was locking down, and what happened was they took July beans down $1.18 yesterday.
Wow.
And that was absolutely, you could have heard a pin drop in ag Twitter because it was just shocking to see this happen. And we're talking about it blew through $13 and went all the way to $12.50, plus or minus a few bucks. But it was amazing to watch this thing happen. And November beans went down $1, closed about 95 lower. I mean, it's just huge markets. And of course, bean oil got crushed, literally.
Yeah.
Again.
No pun intended.
No pun intended. But the oil chart shows that the fever has broken. And, the same with ethanol. It's just, you see that there's been some major damage done.
We've been warning about that. The oil-led rally is that when it's over, it'll bite quick.
Yep. And what happened was meal rolled over last week. It had it looked dead on the charts. And what happened was with oil, it just accelerated. And we had 20,000 contracts liquidated yesterday in the beans. So that's 100 million bushels. So food for thought for all these farmers out here. I want everybody to think about this, is you saw what happened to move for 100 million bushels to get out of the way. If you think that we're going to ride this another $2-3 and then all of you are going to sell and somebody's going to pay $17 for 15 billion or 5 billion beans, you're out of your minds.
Yeah.
Okay? Because you saw what 100 million did to the market. So, you've got to scale in. You can't you really can't move this kind of stuff, especially as it gets higher and higher. And that's exactly what we saw here. So if you really think about it, how do I put this? If you're wanting to trade 100, 200 million bushels of beans and move open interest over a day, you have to figure you're going to have big moves in the market and big volatility. This is not going to happen at 13 and a quarter.
Yeah.
And so I was just going to stand there and take it all.
Yeah.
Because, I don't know anybody's going to take a 60,000 lot, to be honest. But anyway, it's what happens in these markets when the fever breaks, it blew down. Then, of course, China comes in and buys 500,000 tons of beans this morning. Market shot up 60 cents.
Okay.
So it's just like, whoa, now we got them where we want them now. And the thing is, you do today, but you're still 50 cents lower than you were 2 days ago. So, of course, ag Twitter, drought Twitter, the crop is dead Twitter is back on their goats and traveling here. But, it's pretty funny to listen to these guys. I just love ag Twitter. But, it reminds me of the farmer's prayer. Dear Lord, please kill everybody's crops except mine.
Yep.
Because that's what it sounds like in ag Twitter. But, the weather continues dry. There's, rain in the forecast, rain taken out of the forecast, rain in the forecast. It's just like, it's almost like you got to pick a point, either buy it or sell it, and just be quiet about it.
Yeah.
So, but that was the biggest move in beans.
Mm-hmm. So with soybean oil, how about ethanol?
Ethanol is the same thing. It's rolled over. There's some damage done to the charts.
Mm-hmm.
So what that means is that, to put out new highs, you have to have some impetus.
Mm-hmm.
So, that's the thing is, when you put up a high and then you go down and do some work and then it breaks, that is very dangerous on a chart.
Okay.
And that means you got to do tons of work to get back up.
Yeah. So did this shake out in corn the same way it did in soybeans?
Not as much, because corn is much more susceptible in this weather. Beans can go one way or the other right now, but I think so many people had gotten so crazed about beans that we saw, there was a buy premium in there, and you saw what happened when that thing got taken out, because there was nickel moves, and I've seen that before, but when you see nickel and dime trades. So in other words, what that means is that you're not trading 13 and a quarter bid at a half. You're trading 13 bid, 13.20 offered when these markets open up, because nobody knows where the market's actually at because it's moved so fast.
Mm-hmm.
But corn got spanked pretty good. It's still held in the 530s, so it's doing better than the $5.50 it did 2-3 weeks ago. There's still a big gap below, but yet we're not going to be touching that anytime soon. So it's really, corn is susceptible. Spring wheat, of course, is very susceptible.
Okay. And
it's showing the way the model is working. The model is setting here, and the prices are setting here. So something's going to happen one way or the other. We'll have to see. But you gotta be careful here, because corn is like grass with a bunch of water in it. And if this thing dries out, it's going to get really interesting. But because but if it rains the way some of these reports are showing, then it's game over.
Okay.
So either all the way.
Oh. One way or the other.
Yes, indeed. So it's really, this is as dangerous as one of these 88 years where you just got to be a real pro, because think about this. If you're like a day trader, you can say, well, I can make or lose 3 or 4 cents, maybe a nickel. You got to be willing to lose 20-30 cents of corn either way.
Okay.
If you trade this stuff right now. And that's what the volatility is telling you. That's what CME margins are telling you. This is for the pros from Dover.
Yeah.
So,
business.
they absolutely mean business, because if you'd have seen those things ticking yesterday, where they're going by nickels, and then it started dimes.
Wow.
So.
Yep. So, well, how about wheat?
Well, wheat, even though it should have been up front because of spring wheat, just continued to perform. We're seeing this heat is bringing on this crop just fabulously. Okay. Out in Kansas. If it's less than 400 million bushels, then I don't know what I haven't traded wheat in 40 years.
Yeah.
So in other words, this is going to be a big crop. Now the question is how much protein is in it. So, that's what everybody's looking at right now. Okay. But early reports, even in the marginal areas, it's coming at 11.5 and 11. So we're seeing some pretty decent proteins. If we're starting to see some good stuff, in central Kansas and north central Oklahoma, if we start seeing 11, 12, and 12.5s, then spring wheat's going to have a big problem. Okay. Because we can do replace some of the protein. So it's really just like corn. You got to be willing to lose 50 cents one way or the other in the spring wheat. So,
with all the grains breaking off, how has this changed the inflation story?
Well, the same thing has happened with copper. Lumber broke down because people just aren't buying it. The lumber jokes on Twitter are just hilarious. Sep lumber traded at $8.50 today. Okay. Remember last week I told you if it broke through 1,200, look out. Well, here it's $8.50, which is still ridiculous compared to 200. Yeah. But still, it's 1,850 was high, and it's just now it's broken 1,000, which is ridiculous. Yeah. But the inflation story has broken off. The reason is there's we talked about crude oil. It kept going up and up and up. And I said, if it gets over 70, it's dangerous. And it got 71, 72. And then all of a sudden Goldman Sachs and Iran said, well, we think oil can go to 100. And ba-boom. I mean, that was the end.
Yeah.
And people said, then they stopped buying. I mean, we talked about this a million times. High prices cure high prices. And if you remember, last year ago, 12 months ago, crude oil trade -40. Negative. Remember that?
Yeah.
Now they're talking $100. So, the story is incredible. It's actually stupid to be thinking about it. But, as it ticked up to 72, all of a sudden it broke down. The dollar rallied from 89 to 92 and just ripped everybody a new one.
Yeah.
So there is a story that somebody's got a big DXY dollar short position, and they are in big trouble. And of course, the Fed is continuing these monster reverse repos. And there's something's afoot, and we're all trying to read the tea leaves.
Yes, figure out what's happening behind the scenes.
Well, think about this. They're talking about $500 billion in reverse repos. If you remember how much money we put out after 2008, $787 billion.
Yeah.
Okay, they're reverse repoing almost that much every night now.
Wow.
So there is something going on. So we will keep you posted, and maybe we'll get one of my, treasury buddies or somebody who can really speak to repos and reverse repos about what this really means and the size of this thing.
Yeah.
But usually it means there's a liquidity problem somewhere.
Okay.
That's why they're doing this, or that the Fed has just got so much money and they're trying to drain the situation. But the dollar hit 92 today, and I mean it was 90 last time we talked. Yeah. Last week. So that was 2%, which dollar gets stronger, everything else gets cheaper, overseas. Yeah. So very interesting.
Well, any other thoughts for this week or things to look for next week?
I'm going to really be watching the housing numbers, because, copper and lumber, even though they came off, this stuff ripples. And, this is just like a blast wave, copper going almost to $5 and lumber doing what it did. There will be repercussions in the housing market, but we're seeing, Case Shiller numbers coming out 13% year over year increase in housing. I'm seeing consistent numbers of farmlands moving up in price. Yeah. So, Mark Twain, keep buying farmland. They're not making any more of it. But, we're hearing numbers that are pretty ridiculous in Iowa. So. Anyway,
all right. Well,
that's what we're looking at.
Thanks for the update. For those of you who are Croptimize Pro subscribers, stay tuned for our Croptimize Hedge report to hear insights about what the model has delivered this week. If you're not yet a subscriber, you can learn more and sign up at thefarmcfo.com. Thanks for tuning in to this week's market update. We'll see you next week.